Did you get it?
I think so.
Okay. Do you want me to you want me to hook up my Bluetooth things so you
No.
can,
You mean so I don't have to,
so you don't,
it doesn't come over the room?
Yeah.
If you, yeah, sure.
just.
Well, otherwise you're gonna be listening to all this babbling.
Yeah. I mean, I'll still hear you talking, but.
I'm not saying anything if I can avoid it.
What time is it? It's supposed to be now. Okay, when they pop up, all you have to do is have that in your ear.
Okay,
There's two of them, but you really only need one.
Yeah. okay, thanks.
Do you want me? I'll put it in there and leave it charging.
Okay.
This is a charging case. Okay, but they're connected. Here. Ah. Watch the fridge.
This meeting from 5 to 10:45.
10:45. Oh, it's not gonna be that one. It's 4:30 now, but it's not 5:30 there. Shouldn't it be on?
Not on, because I've got
We'll
it
make
signed
sure.
in.
It sounds like they don't have the timer. You've got it sitting right there. So if they're gonna come on, you're gonna be there. You're in the meeting, right?
I think I am. I don't think it started yet.
Yeah. Still need the detergent.
Well, not sure this is working.
What?
I'm not sure this is working.
Yeah.
Well, they disabled it for some reason, and
You see, oh, you can see.
well, this should be, that should be this.
Yeah, welcome everyone. I'd like to call this meeting of the West Hants Regional Municipality Audit Committee to order. Configuration has changed a little bit since our last meeting, and for the benefit of the people on Zoom, particularly Lachlan, we've all introduced ourselves, but I think a round of introductions would be in order. So perhaps starting on my right. That would be you.
Hi, I'm Carly Rochon. I'm the Director of Financial Services with the West Hants Regional Municipality.
You just grab your,
There.
yeah, just move it a bit closer to you.
Hi, I'm Nicole. I'm the new girl, your Citizen Audit Committee member.
I'm Crystal Remy. I'm counselor here in West Hants.
Paul Whedon, Counselor, District 4.
Hi, Mark Phillips, Chief Administrative Officer.
Jim Ivey, Counselor from Windsor.
Vicki Robertson, Citizen Committee member.
Lachlan? Do I see him anywhere? No. Okay. No, he should be there. Can you hear us, Lachlan?
I can hear you, but my video has been disabled by the host for some reason.
This happened last night.
Can you hear me?
In our meeting as well.
Can anyone hear me?
Just. What's that?
Can
Andy, can we hear you? Can you speak, please?
Can you hear me?
Uh-oh.
We can hear Lachlan.
Problem.
Oh, you can hear Lachlan. He said they could hear Lachlan.
Okay, good.
You could turn your volume up.
I don't know what's going on.
Your video's not turning on.
I'm not sure what's going on. Is anybody, are you waiting on me?
Is that Lachlan?
Yes.
We can hear you now, Lachlan. Can you hear us?
Yes, I can hear you fine. I do have a video, but it's been disabled by someone on your end. Okay.
Excellent.
All right. Thank you.
Okay, and I think everyone else can introduce you as we work our way through the agenda. I'm Rupert Yanush. I'm filling in for Abe, our mayor, who's unwell, and also regrets from Scott McLean. Declarations of conflict of interest. Are there any direct declarations of conflict of interest? Seeing none, we'll move on to announcements. We're gathering today in Mi'kma'ki, the ancestral and unceded territory of the Mi'kma'ki people. We are all treaty people. We also acknowledge that people of African descent have been in Nova Scotia for over 400 years, and we honor and offer gratitude to those ancestors of African descent who came before us to this land. We are grateful for the participants who are joining in this session today. We thank you in advance for the important work that you will be doing along with us to see the anti-discrimination strategy materialize and live on for generations to come. Any further announcements? If not, I would be looking for any additions or deletions to the agenda. And if not, then we will approve the agenda as presented. The next item would be the presentation of the minutes from June 9th, 2025. And they should have been included in your package. So I'd be looking for a motion to approve the minutes.
I'll move.
Moved by Councillor Ivy.
Second.
Second by Paul Wheaton. Any discussion? All those in favor? Contrary minded? Motion carried. Thank you. All right, on to our first presentation. We're looking for Sonny McDougall from MMP to start us off on the water operational audit. Welcome, Sonny.
Thank you very much. Thank you for having us. So my part will be very quick, and I'll be handing it over to some of my colleagues here. So first of all, I want to thank everyone for working with us over the last little while to get this project done. Tonight, Rayma and AFSA they are the colleagues that did the bulk of the work and are going to do the presentation to you tonight. I have also on the line with me one of my partners, Jen, on this file. So I'm going to hand it over to Rayma, I believe, who's going to do the bulk of our presentation for us.
Okay. Just Mark, yeah, we're just going to pause for a minute and see if we can fix the sound, I think.
I'm hoping people can hear me now.
We're just trying to fix the sound. But we could hear you quite well.
Me?
Yes.
Oh, good, because you couldn't before. Great. Thank you.
Should be working, yeah.
You want to try that just briefly again, Sonny, just so that make sure we can hear you?
Is this any better? It could be
much better. That's great. Thank you.
Not too many people complain they couldn't hear me, so so I'll just in case I'll just say what I said there is that thank everyone for working with us over the last little while and getting to the point to be able to have the project completed. Rayma and ABSA did the bulk of the work. Jen Hayes is a partner of mine that's online as well, but we're going to turn it over to Rayma to do the presentation.
All right. Thank you, Rayma.
Thank you. Thank you, Sonny. Hello. Hi, everyone. So I'm assuming everyone's got the materials as well, so I can kind of run through the presentation. So as part of our presentation today, we're going to run through the agenda first, which is we'll start with the engagement overview and then go into the project approach, then move into the credit issue, which is going to include the causes and the timelines of the events and the observations. Then after that, we'll go into current state strengths and gaps and the recommendations, and finishing it off with the staffing model and any questions from anyone. Starting off the presentation with the introduction slide here, this section summarizes the engagement background and the different project phases from initiation to the final report. And as the slide notes, that a full report has been provided to the West Hans management. This presentation is an abbreviated version intended to highlight key outcomes. Starting with the engagement overview. So the engagement has been divided into two parts, an operational review and a staffing model. West Hans engaged MNP to conduct an operational review for the two water utilities of Windsor and West Hans for the 2022-2023 fiscal year, along with a current state evaluation of key processes. At the same time, West Hans is undergoing growth, which puts some additional work for Finance and Public Works Department, along with the current state evaluation of key processes. And then we also developed a staffing model in collaboration with West Hans to identify when more staff may be needed and for which positions. Before I go further deep into it, I just want to make sure everybody has the materials, or would you like me to share screen here? Sorry, I should have asked that at the start.
Yes, Ramya, if you can share your screen.
Okay. Do I have the option? I'm just trying to find the option to here. Okay. Let me know if you can see my screen.
Here we go.
Okay, perfect. Sorry. I was talking and without sharing screen. My bad. You're all able to see it?
Yep.
Yes.
We can see it.
Perfect. So I'll go over to the next slide now after the engagement overview. So our project approach. So this slide summarizes the project, how we approach the project, that is in the 4 phases and the key activities completed as part of it. So project phase 1, project initiation and planning. We began with a project kickoff meeting to level set on the project objectives and timelines and to collect information on project direction. Phase 2, understanding the current state. In this phase, we conducted a comprehensive review of documents, interviewed West Hans management process owners, and developed an understanding of the team's daily activities so we could map how work is actually performed across the utility processes. Then phase 3 was findings and recommendations. Here we went ahead, drafted our internal process narratives, tested key controls, completed the current state analysis and identified gaps, and then drafted recommendations and an implementation for the future state. And then we've got phase 4, which is staffing for the future. So in parallel, while we were doing the operational review, we had the staffing project going on where we collected growth projections, documents to understand assumptions on staffing, interviewed key personnel to gain additional insights on capacity, and developed a dynamic Excel model to identify resource requirements over a 10-year period. And at the bottom section of the slide, you're going to see the deliverables produced across the engagement. So we produced process narratives, which drafted end-to-end processes for 4 key processes that were in scope of the engagement. Credit issue assessment, so conducted an assessment of the 2022-2023 credit adjustment issue, focusing on cause, effects, and observations. Then we also produced a staffing model, built a dynamic Excel model with staffing projections for the next 10 years based on activity drivers, demographic data, and capacity assumptions. And the final deliverable, which is a part of which is what we're doing right now, is the presentation, but there was a full report that was produced as part of this project as well. So going into the credit issue. So this section summarizes the 2022-2023 credit issue involving the bulk master meter that tracks water transfers between the Windsor utility and TMP, the 3-mile plains. We'll cover the main causes, the timelines of events, and the observations, and the main key takeaways is what's stated on the slides. Starting off with the causes. This slide highlights the causes that led to the credit adjustment issue. The causes were grouped into 6 themes spanning technical issues through to communication gaps based on staff interviews and documents reviewed, such as meeting minutes, calibration reports, credit adjustment packages. I'll summarize the 6 themes as they appear on the slide. First, undetected. First is the meter malfunction and replacement, so including equipment failures that resulted in missing reads and programming issue that led to overbilling. Second is the undetected read errors that were only discovered during the budget preparation. Then we have the billing and recording mistakes where overstated consumption and billing errors persisted across 2 quarters. And we have the year-end cutoff confusion where credits and voids were posted after March 31st, impacting 2 fiscal years. Then we've got communication and oversight gaps, including delayed escalation and coverage training challenges and acting roles. And then last would be your communication gaps, communication and oversight gaps, including delayed escalations, coverage training challenges in acting roles. I'm sorry, I kind of skipped over and said that was the last one, but documentation and transparency, which meaning the story wasn't packaged clearly for council review. So those are your causes for this credit issue. Going over the timeline of events. So this slide is meant to give council and the audit committee the full chronology in one place. As the slide states, the timeline was drafted based on documents reviewed, including trial balances, calibration reports, council meeting minutes, budget reports, and the reconciliation sheets. The goal is to show the sequence of key events, the actions taken at each stage, and the governance gaps or advantages that show up through the record. I'll walk left to right through the timelines, starting up with 2020, 2021. This is when the event is meter malfunctions and undetected meter reading errors leading to overbillings. The action is that credits were later issued. The gap noted is that errors were undetected for nearly 2 quarters, and while finance was collaborating with Public Works, there was no escalation at the time. And going into April 2022, the event is adjusted. The event is adjustments posted. So the action is corrections posted in FY 2021, 2022, and FY 2022 and 2023 trial balances. The gap noted is year-end cutoff confusion because corrections straddled between fiscal years. Then in December 2023, the event would be the issue being brought up during audit committee and council meetings. The action is that corrective actions had already been taken and a variance summary was prepared and presented. The gap noted is that council lacked clarity on the issue, cause, and the timelines of events. So no reconciliations were presented and there was no quantification of variance causes, which stirred concern. Then we come to January 2024. Here the event is a councillor submitting a report on transparency. The action is the councillor suggesting a financial and operational audit. The gap noted is that the councillor expressed that they had never seen full reconciliations and were not informed in a timely manner. Then we head into May 2024. The event is calibration reports for Edward Drive and 5 Back Road. The action is that accuracy falls within the 10% margin and indicated meters were working correctly. The advantage noted is the calibration reports were presented to the council to reassure them that actions are being taken. Then you go over to October 2024. The event here is the consolidation of West Hans and Windsor utilities becoming effective. The action is operating under one set of common rates and rules per UARB. The advantage noted is internal billing is eliminated and adjustments are offset. And then we've got December 2024. The event here is the council approval of audited financial statements being divided. The action is West Hans providing an explanation for non-revenue water. The gap noted is uncertainties around events persist and the confusion remains around the variances. June 2025, which is the last in on the slide. The event is a resident submitting correspondence citing narrative inconsistencies around the credit. The action is concerns entering public records. So the gap here is confusion remained around the timelines and resolution of the events and variances. So I would say from the entire timelines, our key takeaway from this timeline using the slides, using what we've presented on the slide is actions were taken and the issues was ultimately eliminated through consolidation, but the recurring theme in the record is that clarity, reconciliation package, and quantification of drivers were not consistent, which allowed confusion to persist over multiple years. After the timelines, what we did was put together some observations. So as stated here, while the financial implications of the issues were outside the scope of our engagement, we discussed the financial statement impact with management to determine the effect on customers and the audited financial statements. There was no impact on the customers of this error, this credit issue. The observations that we've seen through our review, starting with no risk to customer billing. So the overbilling issue was between two utilities, therefore it did not affect customers. That point is important because it separates the internal settlement issue from customer billing impacts. Second is cross-department collaboration. There was active collaboration between the finance department and public works for issue investigation and resolution. So operationally, teams did work together to address the issue once it was identified. Third, credit adjustment. West Hans maintained detailed records of the issue investigation and corrections. So there is documentation in the record supporting what actions were taken. Fourth, utilities amalgamation. So the October 2024 UARB approved consolidation unified rates and removed internal billing. As the slide notes that when utilities merge, errors were canceled out in the combined records. That's a key structural point. The mechanism that created internal over-under billings is removed. And then the fifth was the communication gaps. And this is the conclusion statement at the bottom. Well, the credit issue is closed due to utilities amalgamation. The communication gaps remained. The slide is explicit that information shared with council was fragmented and lacked complete supporting documentation. So the way to summarize this slide would be operationally, the issue was resolved and didn't affect customers, but governance-wise, the record shows that inconsistent packaging of explanation and supporting documentation allowed concerns to persist. Moving over to our next section. So this is the current state overview. So in this section, we highlight the strengths and areas for improvement identified through review of internal controls and the 4 key processes within scope, which is meter reading, revenue and receivables, compliance with board orders, and financial reporting. Before we go into what the gaps are, we wanted to talk a bit about the strengths, the main strengths that we identified through this process and control testing. The slide highlights the access controls, escalation protocols, UARB compliance through dual verification and reference to UARB rules, which improved payment collection practices, including the door knocker step and more frequent reporting to council, shifting from yearly to monthly reporting to add transparency. These are some of the key strengths that we've got. Now going into our gaps. So the slide summarizes 8 key gaps we identified through the current state analysis spanning staff capacity, systems and technology, manual steps, and analytics. and reporting. Starting with the key person risk. So West Hans relies on key staff serving as the sole point of knowledge and execution for critical functions. This concentration of responsibility creates a dependency risk in case of turnover, going into occasional lack of segregation of duties. There were instances where we noted lack of segregation of duties between the preparer and reviewer during staff turnover or absences. Then going into limited integration between systems. So there's many systems operating with manual transfer points. This limited integration, which leads to duplication of staff effort. Recurring equipment programming issues. So since amalgamation system is dropping digits during meter reads due to programming differences between the old and new meter reading systems, therefore as a result it increases manual steps and staff effort for investigations. Then we have the first one on the right side, which is heavy reliance on paper and manual steps. So paper-based annotations, reconciliations, and forms were noted. Digitizing these steps would improve efficiency and streamline upcoming growth. Then we have lack of centralized customer database. So West Hans keeps account notes and history, but lacks a single up-to-date customer contact database. A CRM is essential for direct communication channels and prompt issue resolutions. Limited KPI tracking was another gap noted. The lack of consistent tracking of key performance indicators, metrics, limits operational visibility for management. And aggregated variance analysis. So variance analysis could be enhanced to quantify causes and implement trend monitoring to provide greater clarity in reporting and improving transparency. Based on our assessment and the gaps identified, the next section is going to summarize 5 high-level recommendations informed by the credit issue and the current state analysis and anticipated growth. So this recommendation summary, it summarizes the full recommendation set and the relative implementation effort at a high level. As stated at the top of the slide, MNP developed recommendations to address the gaps identified through the credit issue and current state analysis, and to equip West Hans to support and sustain anticipated growth. You'll see the 5 listed recommendations. Recommendation 1 is improve financial reporting by disaggregating variance analysis and introducing KPI. The next one is increase the frequency of internal water meter audits and inspection for earlier issue detection. Recommendation 3 is invest in cross-training staff to reduce dependency on key individuals. Recommendation 4 is hire a senior accountant to support the manager of accounting and financial services and offer immediate backup. And then your last recommendation is create a public works advisory committee. So you on the slide, you'll also see the column that says potential implementation ease. So we did rank these recommendations as to how quickly or how easily you'll be able to implement them. So as you can see, the first 2 are marked as low effort because it would take significantly less time for these recommendations to come into play, whereas recommendations 3 and 5 might take a bit more, and then of course 4 is the highest effort that would need to be made to be able to implement this. The key message at the bottom of the slide is prioritization. So 1 and 2 is as soon as possible to improve reporting communications and mitigate risks associated with equipment failures. And then we can see that the slide closes over here with the technology point that West Hans is exploring a transition to a new financial software provider. The slide is explicit about what needs to happen to make that successful, establish a clear implementation roadmap, complete data cleansing prior to migration for accurate inputs, and redirect staff capacity towards cross-training and analytical tasks once the system is adopted. And just to tie this back to public works as well as finance, recommendation 1 and 2, improve council facing reporting and early issue detection, but they also support public works by improving the quality of operational data, strengthening monitoring, and reducing time lost to manual investigations. Now we'll go through the detailed recommendations. So this slide expands on the first 2 recommendations and the impact they're intended to have. The first one, improving financial reporting through disaggregated variance analysis and KPIs. The purpose is clearer explanations, consistent reporting, and better tracking of drivers, which supports both oversight and management decision-making. The second here is the increasing the frequency of internal water meter audit and inspection for earlier issue detections. The intent is earlier identification of issues, better data integrity, reduce recurrence, and better inputs into reporting and trend monitoring. The next slide explains the recommendations 3 and 4. So invest in cross-training to reduce dependencies on key individuals. The purpose is resilience, ensuring continuity during absence or turnover and reducing single point knowledge risk. Recommendation 4 here is hiring a senior accountant to provide immediate backup and support strong oversight. This recommendation is framed around improving coverage, improving reporting accuracy and timelines, and strengthening segregation of duties. Then our last slide is about the detailed recommendations. The 5th recommendation. So the purpose of this is to create a structured forum to review operational concerns, clarify how and when issues should be escalated to council, and strengthening collaboration between public works and finance. So So the next phase or the last phase of this report is the staffing model, and I'll pass it over to my team member here, Absa, who's going to walk us through the staffing model overview.
Thank you very much, Rayma. Good evening, everyone. So I'm going to do a very high-level presentation of the staffing model. So what it is important to note that this model was completed as a standalone project. So it's separate from the operational review and all the information Rayma just presented. So it's not a continuation of the slide presented. It's designed to help West Hans understand the future resource needs over the next few years as the municipality continues to grow. As you can see on the left-hand side, you have a picture snippet of the dashboard to give you an idea of what the outputs look like. We won't go into the details, but rather we will focus on how it was built and its purpose. So first of all, MNP built the staffing model in collaboration with the Director of Finance and the Director of Public Works. And we use input from housing development, population growth, and operational workforce of both departments to inform the numbers. The project staffing models is a dynamic tool, which means that the team members can adjust input as new data becomes available, and the projection will automatically update in the back end. That means that if management picks it up in a few years from now, they will be able to modify the data, such as the actual population numbers and the actual new development, so that it will reflect the true labor needs. So what it tells us at a high level is that the capacity pressures are emerging, especially with the water utility consolidation and the water utility anticipated growth. Thank you.
Yep.
Yeah,
and the key takeaway on this one would be that the tool, it's a tool that can be updated as assumptions change, and it is intended to support West Hans planning as growth continues. It's a dynamic tool for management to, change based on the inputs that we've put in. Yeah, I think, and that concludes our presentation. So we're happy to take any questions.
All right, thank you very much. And time for questions. I don't see any lights on yet. Councillor Ivey.
I'll weigh in for a change. So I've got a few things here. And so the first thing, just as a general comment, I mean, my primary focus as part of this, the report, the last piece that you did on the staff component is I think more of a staff component. It wasn't part of, I guess, the council focus or my focus in looking to get this motion put forward. But the interesting part of it is that when this was put forward as a detailed financial and operational audit. And financial was the first part of it, because that was seen to be the most important relative to the economics of what was taking place. And the operational was added because it was clear that there were things in the production line that were affecting the tracking of the revenue. So when that got parsed and split in two, so it was only an operational audit, it sort of really dismembered the intent of the report that was being requested, or the purpose of getting the audit done. And I only had to say that because as I listened to everything that we've heard here now, it's what we've sort of heard before, what we talked about before, as part of this process, more frequent meter reads and, alignment with staffing and the like, which again, were components previously discussed. So when I look through it, I see here that there was a full report was provided to management. I'd asked earlier, is that being circulated at any point in time to this committee or staff? And I guess that's a question through you, Chair, to the CAO or the Director of Finance. Is that going to be released, or is that?
Director of Finance, CAO, anybody want to take that?
Yeah, so I have not received the reports yet. However, they do reflect what's in the PowerPoint presentation as I would consider the PowerPoint presentation an executive summary of all of the findings that you would see within the report. But we have not yet received the final report or the tool. So those will be coming, and I'll just add to the tool is also going to be something that will be worked on through our organizational review as well.
Will be shared when we receive it.
So my question goes to the reference on the cover page, which says that a full report was provided to West Hants management. Is that a full report on the credit issue? Or is it a full report on the staff component, or is it both? What is it that's already been provided? Because you're talking as though the report hasn't been issued, but this PowerPoint says on the cover page that they've already issued a report.
CAO?
Yeah, we've had the benefit of seeing the final, the draft of the final report. So this represents the executive summary. And when we get it, its final version, not that we would expect any significant changes, it's just the final drafting before it's released. And again, trying to meet the timeline for this evening's audit committee. We thought we would bring this executive summary forward. And when the final draft arrives, yes, this committee will have access to that.
Thank you. I don't know if I'm going to see any other lights here, and if not, then I'll just roll until anybody wants to put on a light, but I've got a couple more if I can.
Couple more, Kim, and then there's Nicole.
Sorry. Okay, I'll do this one then. So to the point about the credit issue and the statement that it didn't affect customers, it actually did. When the two utilities were separate before consolidation, revenues that were not paid, I'll use the term properly, to the Windsor utility, they incurred the cost of treating the water, of the distribution of the water, of everything that took place with that to get it through to the 3 Mile Plains deposit point. All those costs incurred for which they didn't realize the proper amount of revenue. In fact, as part of the analysis on the financials, the credits that were issued were so deep, they didn't even receive the value of what they provided in water to 3 Mile Plains sufficient for 3 Mile Plains to actually have drinking water for the year. the credits were that deep that all the lost water within the system as part of that transmission disappeared, and the revenues that were realized were less. So there is a cost in that regard, and there was a cost in the use of reserves to cover the Windsor water utilities loss experience that year, primarily as a result of this. So there is a broader picture here. Were the end user customers at the tap affected? No, they weren't. But the utility incurred the expense. The utility had a draw on reserves, and I think it's important not to lose sight of that. That was a big part of the financial aspect associated with this analysis, and I don't think it's that we should lose sight of that. That they consolidated, and the timing of that does blend everything. It's where you, like a marriage, where everything gets put in together, all the assets, all the things go together. But that's purely coincidental based on time that occurred. That utility before the consolidation was out that money, and I think that's unfortunate. I'll turn the mic over to anybody else that wants to.
All right, thank you, Councillor Ivey. Okay, Vicky.
Thank you, Mr. Chair. So as I was reading through this, one of the things that struck me is there had to be sort of quarterly reports that were produced during this period while there was this billing error. And it mentions in a couple of places that the variance level was done apparently at a fairly high level. I was just wondering if somebody could give me some indication at what level is the variance analysis being done? Is it done just at total revenues and not sort of at the individual levels? That's the part that I'm not quite clear on. Because from my experience, when we're doing variance analysis, especially when we're preparing reports, we always look at sort of last quarter to this quarter, or last year this quarter to this year this quarter. And I was just wondering, at what level are they being analyzed that this would not have been picked up?
Director Rochon, do you want to?
Yeah, thank you. And I might also get MMP to kind of maybe explain their statement a little bit more. But from a variance analysis component, we would look at what quarter to quarter is. Same with what you had mentioned, we would also take out and look at what the previous year's quarter was at that time in comparison to this quarter. And then we would also look at, okay, what's our year-end total? Where's this projecting? How are our forecasts looking? And then we would comment on anything on our variance method of anything plus or minus 5%. So we would make a physical comment on our financial updates, anything plus or minus.
So was the variance less than 5%?
So in this one, at the time of the report, and again, I'll kind of say this, we were an annual on the water utility, and then we moved to monthly. And we were doing quarterly kind of looks at the account. And that's why when we did the budgeting exercise as well, because I also use variance and averages within that over the number of periods, it was very clear that it stuck out and it needed to be investigated. And I know on the water utility side, our water utility clerk picked up on, of course, the misreads and reported those as needing to be investigated. So it was kind of happening on both sides at once.
Yeah. Okay, thank you.
Okay, any more lights on? Okay, Councillor Ivey.
Yeah, thank you, Chair. I guess the only other comment to make, and I wish I wasn't so negative in this regard about it, but is that we still see challenges with those meter reads on a regular basis, seeing that information coming in, batteries wearing out and the like. And therein lies the challenge of ensuring, because even though the utilities are consolidated now, it's to ensure that we still keep track of that water and the transmission lines that it's going down, because the loss of water that we have here within this utility is significant. It's greater than 60% throughout the Windsor 3 Mile Plains area, and also high in the other areas. So I just think that that's really, really important that we understand this, because we had the drought this summer. We've got significant capital expenditures going into the utility in the years to come. And for all the water that we're losing, we could probably avoid capital expenditures in some areas if we were able to get a better handle on what we're tracking. Statement made in council a couple of months ago that we were treating less water now than we were when we started is difficult to reconcile, given the growth we've had in the last 20 years. But what it does highlight, or what it did highlight, is in fact there's a large block of water that we aren't tracking that isn't going through the metered system, but that's going through the treatment system. And so again, there's more lost water that if we are able to capture it, we can probably reduce significant capital expenditures in the years ahead. And so we really need to get inside that. And that's, an important part of what goes on here. And I'm sorry, I'm kind of running here, but the one last comment I'll make is there is a financial update later here in the report, and it's not the same that used to typically come to the audit committee. The audit committee used to get a fairly detailed, broken out quarterly update or end of year update that gave you a really good sense on a variance analysis basis as to what the budget was, what the actual was, and what was left in the year. That would be, I think, very valuable to get back to that as a structure, and even look at that in the reports to council, to the comments by Citizen Vicky here, as far as a way to actually look at and see where the pluses and minuses are throughout the system, more than just water, but overall. But on the water side, for sure, to see that detail would be very helpful. Thank you. Sorry for going on so long.
Thank you, Councillor Ivey. Any final comments from MNP?
I'll just reiterate that the draft final report was, like I said, like Director Finance said, was prepared and will be released very shortly after this meeting. And just, that's like a 70-page report. So there's a whole lot more detail in there that if we had to try to present this whole thing tonight, we'd be here till midnight. So I think in there, you'll see a whole lot more background between the various points and various issues that are being discussed here at the table. So hopefully, like I said, we can turn that around very quickly to management in short time.
Okay, well, seeing no more lights on, thank you very much for the presentation. We look forward to the report, and wish you all a very good evening.
Thank you so much.
Thank you.
All right, moving right along to 6B, Kenton Duffett. Andy Forsey, we're looking for the consolidated financial statement presentation, please.
Thank you. I just want to make sure everybody can hear me.
Sounds good.
Great. Lovely. I'm a little bit under the weather, so if I'm not loud enough, just yell at me or raise your hand and I'll try and do the best I can. That was a nice presentation. I enjoyed that actually before. So thank you again to staff for all their assistance throughout the audit this year. I know there's a few new people around the virtual table and the actual table, so I won't bore you with too much of the audit process, but I will go over a brief overview so people can kind of get the understanding. An audit is an independent examination of your financial statements. The purpose is to provide reasonable assurance to council, the audit committee, and the public that your financial statements are presented fairly and prepared in accordance with the Canadian public sector accounting standards. And when I talk about fairness, the real concept there is materiality. And I guess the concept of materiality is, yes, we do quantify materiality, but that's just a guide for audit testing. Really, it is what magnitude of misstatement would lead someone to have a reasonable person to have a different opinion of your financial statement. So, if your rounding is off by $10, would anybody care? Nope, I hope not. If you're missing a $10 million loan, would somebody change their opinion of your financials? I do believe so. I certainly would hope so. And in the concept of misstatements, there's two types. There's intentional, We talk about fraud or misappropriation of assets. And then, of course, there's unintentional, which would be human error. And while both are equally as important, and quite honestly, 9 out of every 10 misstatement that we come across or more probably is unintentional. I do feel that the concept of what level of misstatement does vary between unintentional and intentional. Like if someone stole $50,000 from you, would you care? I hope so. If your accounts receivable and accounts payable had credits in between the two different accounts for $50,000, would anybody really change their opinion? Probably not, but who knows? So anyway, within that concept of what level of misstatement would change someone's opinion, that is how we sort of qualify materiality. So, it's important to note that we don't examine every single transaction. There's hundreds of thousands of transactions per year. And what our goal is to accomplish is reasonable assurance that your statements are presented fairly. The process generally includes a planning of the audit by understanding your operations, identifying areas of key financial risk, reviewing the financial controls and the oversight process. Of course, we do testing of balances and transactions through documentation, inspection, recalculation, a variety of different audit procedures. And I think the analogy I've always given in the past would be, dating myself perhaps, the old TV show Law and Order. The first half of that show was about the police detectives sort of gathering evidence. And then the second half of that show was the court process where conclusions and judgments were formed. So we follow the same general process. However, we don't take a side. We stay skeptical, professionally neutral, objective, and independent, all of those key factors for us. So we take sort of both sides in one. We gather as much evidence as we need to form a conclusion that we feel your financial statements are presented fairly or not. It is fairly common in every audit to find some things that need to be adjusted. This year, there were some adjustments, but the volume of adjustments were reduced from prior years, which is good. We also, in the audit process, pay close attention to areas of estimates or complex nature that might take a bit more of skill to produce accurate results. And of course, when we have gathered all of our evidence, we must conclude on whether or not the financial statements are presented fairly. According to standards, management would be responsible for preparing financial statements. We don't typically see that very often in most of our audits. It's very, very common for the auditor to sort of take the financial information provided and prepare the statements, which we do in this audit. However, staff are given a copy of these statements several days in advance so they can review them and sort of sign off themselves before we come to this stage here. So after all of that process, and I guess if we were to, I was looking through it today, if we were to print every piece of paper that we have electronically, you would easily fill floor to ceiling. And I've got 10-foot ceilings in my office here. So it's a very vast amount of work required for us to build our file, which means we have an immense amount of work required from Carly and her staff. So thanks to them for all their hard work. We are pleased to report this year that once again, we're offering unmodified or a clean, to use lay terms, audit opinion, which means we do feel that the statements are presented fairly in all material respects. And then we do this on a consolidated basis. So you have individual funds, water utility, water capital, general operating, general capital, different reserves. So we take all of those combined into one. And on a consolidated basis, we do feel that these statements are presented fairly. We did not encounter any matters that required significant modification that weren't approved by staff or forwarded to us by staff, because there were a few things that staff found in their review process as well, which is always comforting. So that we really are pleased with the overall result of the audit, this year. Talking about specific results, revenues were up. 42.4 million approximately, up from 40.7 million the year before. That was primarily in a nice increase to your tax revenue, which went from 26.3 to 28.9, almost 29 million. So that's a good, robust increase to your taxes. There were some other actual decreases, just with gas tax in particular. The year before it was 1.9, and this year it's 800,000. I say 1.9 million the year before. That's just a factor of how gas tax is recorded. So you received about just over $1 million of gas tax funding this year, but you can only record revenue of what was spent. So you spent 867,000 of the gas tax funds on qualified projects. The remainder of that revenue received for gas tax is deferred revenue. And deferred gas tax makes up approximately $7 million of your deferred revenue total, which we'll get to in a second because that's on the next page. Otherwise, there was a slight decrease in other revenue from owned services. Last year it was 3.5 million. This year it's 2.7. The biggest difference there was a large grant the year before received. I'm going to use my memory on this one. Sustainable housing was this year. Last year, oh gosh, I did make a note of it. I'll find it very quickly, but you guys all know.
Sustainable Services Growth Fund.
Sustainable Services Grant. Sorry, that was last year of approximately a little over 1. And this year, the Housing Accelerator was about half that. So that kind of explains that difference in the other revenue and own sources. Otherwise, fairly consistent across the actual results compared to last year from the revenue side. On the expenditure side, we did see increases as well, but in proportion to the increase in revenues. 39 million of expenses this year versus 36 the year before. Most of that increase is actually in amortization. There's $1.2 million increase to your amortization, which of course is non-cash. That is a good reflection of the capital investment made this year, which I'll touch upon soon. Otherwise, we saw just some minor increases across the board. Nothing significant, just sort of natural inflation there. Nothing that was alarming. The biggest other change was actually the appropriation to the school board, which of course is beyond your control. That sort of summarizes an annual surplus of $2.6 million this year. It was 3.8 the year before. However, the factors I described previously do explain that quite well. You do now have an accumulated surplus of $100 million, which is great and a very healthy number. In your statement of financial position, this is an interesting one, and I do wish to explain it. So the previous year, and I remember talking about this point, that you have a net asset position, which is extremely positive. It was almost $1.5 million of a net asset position, which we don't see that often actually as auditors. It's usually a net debt position. That's the fact that now we've switched over to a net debt position this year could be alarming without context, but here's the context for you. And I think this is a great sign of the viability of the municipality. You invested approximately $12 to $13 million of capital assets in this fiscal year, which is a great investment in capital in the municipality. It's wonderful to see. However, you self-funded a very significant portion of that, as the only new debt received this year was $3 million. So there's a $9 million funding of your capital asset position from internal sources. You'll note that the cash balance was $30 million in 2024. Now it's $27 million. So there's a reason for that decrease. However, even though you do show a net debt position, a net financial debt position of $2.6 million, the overall financial picture of West Hants is incredibly positive, healthy, and vibrant. So really, really wonderful. I will call it a balance sheet till the day I die, but technically public sector standards call it the statement of financial position. The financial position of West Hants is very healthy, very vibrant, and really no cause for concern in terms of that viability, which is great to see. There were a few other variances I'd like to touch upon quickly. the increase to the water fund expenditures is primarily in depreciation, which again touches upon the investment to the water utility and the capital side of things. So that just increases what you would see. But of course, that's a non-cash expense. So the water utility really did have a break-even position this year. But a significant portion of that break-even analysis would be the increase to the amortization, which again is a reflection of the capital commitment to that utility. And of course, it was amalgamated, which did create some extra work a little bit in terms of opening balances and transfers. That amalgamation was mid-year, which of course we all know. But really in the end, you've got one utility, which will probably solve some of your problems going forward there for clarity and simplicity. But overall, the financial picture is excellent. We do have a management letter to report as well. I'm going to read it. I've sent, or it's still spinning in my email from the last 2 hours. I'm not sure why it won't send to Carly, but staff will have this, and we do encourage or request that she would share this with the audit committee. I will note that of the 2 issues that we have identified, none of them would be deemed to be. So I would categorize issues on a management letter into 3 categories. One would be a material issue, which is we need an urgent action plan. This is a very significant issue, which could lead to material misstatements on the financial statements. There would be significant deficiencies, which would also require an action plan from management back to the auditor. We don't feel that they're material, but they are significant enough that would warrant an action plan. And the third level of findings are just comments or things that we don't need an action plan on. Just here's some best practices or things to look out for that could improve your financial reporting process. And both of the issues that we found this year do fall under that third, the least significant category for findings. The first one is, and pardon me, I'm going to just read it from my screen. During the audit process, we identified that some of the individual funds were out of balance at year end. So this would be maybe the water utility or water capital or general capital. The actual trial balances isolated just for those funds did not balance. The entire trial balance put together did, of course, balance, but not the individual funds. It is best practice to maintain balanced funds at all times. Without balanced funds, the information to users may not be as reliable as it could be and may lead to additional human resources to correct the issues or could lead to troubles providing completely accurate information from the system throughout the year. Our recommendation on this would be we felt the issue was minor in magnitude. However, we do recommend an improved internal accounting process to ensure all entries are recorded in a way that keeps each fund in balance at all times. This will include adding due to from accounts to adjustments made between funds throughout the year. Our understanding is sometimes the due to froms are adjusted after to make sure they're in balance. We just think it'd be best practice to do that on an ongoing basis. We assess this finding as minor and no follow-up would be required on that one. The second one would be related to HST rebate calculations. During the audit process, we identified that HST rebates had been improperly calculated, resulting in incorrect rebate amounts. We note that this error was also discovered by and corrected by management independently. So it wasn't something that we had to bring to their attention. They were aware of it and were correcting it as well on their own. If undetected, which of course it wasn't, incorrect rebate submissions could lead to incorrect information and receipt of rebates. Depending on the direction of the error, it could also have minor effect on cash flows. Nothing that ever deemed to be material. While we felt this issue was also minor in magnitude, we do recommend an improved internal review process of the HST rebates to ensure no future errors go uncorrected prior to the filing of the rebates. We assess this finding as minor and no follow-up would be required. That would be the end of that management letter, and I'll make sure, I think I had it in high resolution, so it might just be too large to send, or maybe it's taking its sweet time. Either way, I will make sure that Carly has a copy of it and she can share that with the audit committee at her leisure. But nothing to be overly concerned about. In closing, we feel West Hants continues to maintain a very solid overall financial position with growing accumulated surplus and ongoing investment in capital infrastructure. The audit was completed successfully, and we issued an unmodified, clean audit opinion with no significant matters arising. Thank you for your time this evening, and I would be pleased to answer any questions that you may have.
Vicky.
Thank you, Mr. Chair. I have a few. One of the things that I noticed under revenue, there was a significant other revenue. It's almost 2 million. I was wondering if we have any more details on what that was. And can it be expected again?
Just going to pull on my one screen to the next. I should have that open.
It wasn't budgeted. It looks like it was not something that we thought we were going to get.
The budgeting process in some of the funds is it's proper, it's done properly. However, I don't care for it because some of the variances in other are actually not variances. The differences in other would be grants that come from a capital fund or a reserve fund. I'm not sure if I just got kicked out or.
No,
you're good.
Okay, I just see a wall with a light on it. So in other, of the $1.986 million, 1.90 million of that is actually a capital grant, and that capital grant was not budgeted, and that's up. So there's no income expense budget in the capital fund. And that's why you don't see it as a budgeted item on your financials, because we as auditors have to segregate what is income and expense from the capital fund. Your internal accounting process and everyone's internal accounting process for municipalities just sort of throw that into surplus, and it's the auditor's job to break that out at year end for consolidation purposes. So that's why it doesn't get budgeted. If there's a capital grant or capital expenditures, they don't get budgeted for. However, of that $1.986 million, 1.9 of it was capital grants. The other a little bit, that was 86,000, was insurance proceeds that you received throughout the year. So those typically do fall under, I guess, other as a capital grant. So that hopefully gives you some explanation on that one. But there's only two items in that entire other. One is capital grants, and the other one will be insurance proceeds also from the capital fund.
Okay. So the other question I had was around the surplus. So I noticed that we actually budget a surplus, and then we actually exceeded that budget, which was nice. But my understanding, the FRAM standard, so the provincial reporting standard for municipalities, requires any surpluses go into a reserve. I know you probably didn't do these based on these statements on a FRAM basis, but I was wondering if there's any statements or anything anywhere that says this is like the accumulated surplus of 100,000 or $100 million. Where is that? Like, is it in specific reserves? And what is it like? Is there any policy about where the surplus goes?
Yeah.
Sean or Andy?
I think Carly probably has the best answer. I'll chime in as well, but I know
I was
Carly
trying to find it in the notes, and if it's there
Yeah.
and I missed it, I apologize. I was trying to find it and I couldn't find it.
It's actually a great question, but I know Carly has an answer, and I can chime in if she needs me to.
Thank you, Andy. So when you're looking at our consolidated budget, that includes everything. So we don't actually budget per FRAM a surplus. So that's the consolidated budget with our reserve budgets and all that. If you look at page 26, you'll see our non-consolidated statement, which shows that we follow the FRAM guidelines and budget for zero. The accumulated surplus, again, Andy has a great explanation about what accumulated surplus is, because it's not exactly, and I can't remember what you used last year, Andy, but typically what you'll see is the non-consolidated surplus on page 26 that gets moved into the reserve.
That's correct. Yeah. So you would see that general operating fund surplus, and that I prefer in a budget analysis. That page 26 is a bit more ideal for information purposes. I actually think the first few pages of the consolidated financial statements under PSAB should be revised. I think budgeting in particular is difficult for users to understand, but it matters that we just brought up, like capital income and expenses aren't a budgeted thing. And also the other one would be amortization. So if you look at page 3, and you say, oh, we budgeted $725,000 for depreciation or amortization, apologies. Well, that's the water fund. But the general capital fund, again, doesn't have a budget for FRAM. So you'll have a $5.8 million amortization actual versus a 725 budget. I think those are things that public sector accounting standards needs to look at and change to make the information more informative to the users. However, on page 26, that is the general operating fund. The budget does go to zero as a change in fund balance. And then you would have $1.4 million surplus, which was tremendous. And then that would be on a cash flow basis. So you budget for obviously debt payments. That's a cash item. It's not an income or an expense item. So your budget on a cash basis in that general operating fund should be zero, and any surplus does get added to the general operating reserve on an annual basis.
This was, I think, what I was looking for when I was desperately trying to find it.
No
This makes
worries.
more sense to me. Thank you.
And so one of the practices that we implement here that may differ is we budget for our debt servicing in advance.
Yes.
So anything that is within our debt servicing, which you'll see on this statement, we have 2.3 there as our budget.
Yep.
We only ended up having actual debt servicing costs of 1.6. So as part of our transfer, we earmark the difference for the debt servicing projects when they're completed. And we reduce the borrowing amount from MFD.
Okay, thanks.
And if you were on page, I believe it's 37, if I'm off, I apologize. You should see 3 separate operating reserves, a Windsor, which, I mean, we could consolidate them into one, but they're separated. I think that's fine and probably a good practice. Windsor, West Hants, and then the region. So West Hants would be the former West Hants, and the region would be the current one. So there would be 3 lines there. And I'm going to flip to it. I apologize. I just want to give you the right numbers. It is 37. Okay, good. And then you have a 1.8, a 2.3, and just under $1 million closing fund balances in all of those reserves combined at the end of the year. So that's where they would hit in your general operating
Yes.
reserve.
And there's a detail in there for both operating, special, and capital. One of the things I will state again, because of our dissolutions and our amalgamations over time, you'll see that we do have a duplicate or triplicate or extra reserves, but that's because they have to stay within the former boundaries of those former municipal units. So they will slowly disappear as the money goes away.
Familiar with the concept. Yeah.
Okay, any other questions? Councillor Ivey.
Thank you, Chair. Just a couple if I could. I apologize, I had to step out to clear my head. And so the one question is on timing. We're quite a bit later than normal this year. And if I missed that when I stepped out, is the reason that I gave the preamble there. But we're quite a bit later this year. What drove us to be into, we're 10 months into the year at this point in time on the current budget, and we're quite a ways past last year's. Was there anything in particular that drove that?
I would say I would summarize that into 2 categories. One, I thought the water utility audit presentation raised an interesting point. I will be honest, I'm slightly uncomfortable mentioning this to anyone because it means it could be deemed as a recommendation to spend more money. I believe the finance department probably could use one more staff member. I do know Carly has a new staff member this year, and I also know, and I've said this, I think at least once, if not twice before, that this is a very, very unique accounting setting in the accounting world. Like you could throw a CPA in that world and they would be completely clueless for 2 years. and I mean an experienced CPA who does all kinds of accounting and stuff. It's a whole different set of standards. It's a very different way of doing accounting. There's fund accounting, and that's not exactly intuitive for people. So I think with new staff coming on, we were a little bit slower getting the information, and I don't mean that as a criticism. I just mean that as they were taking their time to make sure it was done with high quality. So there were some trial balances that we received later than usual. I think the last one we received was in January, the 13th. The other issue would be me. I'll be honest, this is my last time doing this audit. I do have some health issues that would preclude me from working as much as I used to and as much as I'd like to. So I was a bit slower this year as well, which I do offer my apologies for, but unfortunately the health didn't cooperate, hasn't been cooperating as much as I'd like it to. So I wasn't really able to work 7 days a week like I usually do. I really enjoy this file and I always have, but that would be a significant contribution as well. But I don't think it should lead you to have less confidence in the finance stuff. I just think that perhaps it's a very tall task for Carly and to have a competent staff, no question about it, but inexperienced staff underneath. I know Diana left, I think just around audit time, or the end of year-end time, apologies. So for that learning curve, what I would estimate to be 2 years, 2 months really isn't sufficient for that person. So I just think those two big factors were the reason for the delay. I don't foresee it being an issue moving forward, as staff would be a bit more experienced going through their second audit as a team. I know Carly's been through many, but Carly is one person, and you've got $35 million worth of revenues and $32 million worth of expenses, and you've got $100 million surplus. Like, it's a very large municipality. It's not a small town. It's not even a big town. It's a big municipality. Expecting one person to be able to handle all that. I know she's got other people like payroll and things like that, but I do think that department was probably a little bit understaffed this year. And of course, I will certainly acknowledge that my health did cause some delays as well.
That's great. Thanks. And I appreciate that. I know that timing's been talked about previously, and I think the expectation in the last year was for it to be sooner, quicker, and time set aside that would have gotten done that way. But I didn't know if there was anything else I think your comments were that it was relatively clean audit. In other words, nowhere near, there was a few years ago when there was a large volume
Correct,
of adjustments.
We definitely did not see that this year.
That's what I heard in your words, and so that's great. I can't help but being curious, even at the audit committee level here, and it's part of the affirmation as part of the start of the statements here about the regular reporting that takes place. And while council gets monthly reports, I don't think the audit committee has been as regular with its financial reporting, and I don't know that would make it different or not if you were doing quarterly reports here that were coming through. And in other words, your books are getting lined up quicker throughout the year rather than if you get out of that cycle. I know what it's like when I do mine. If you miss a quarter, then you skip to another quarter. Next thing you know, you're trying to catch all your quarters up at once.
It's a very good point. I think it wasn't last year, but I think it might have been the year before, or when there was a significant, I think it was the year Carly was off for maternity leave, that we did have on the management letter that we thought more frequent financial analysis would be very beneficial. Because your point is valid. I experience it every day. Like, we see staff or we see clients who get a month behind or 2 months behind, or something happens, and then you rush to catch up, and then the quality of work suffers a little bit. So I do think 1 year we had suggested quarterly sort of an analytical review. And I do believe, and I know I get a little bit of pushback from different towns that say, like, oh, 4 audit committee meetings a year is too many. But I think there's one with the auditor before the audit, one with the auditor after the audit, and there's 2 more. And I think at all 4 of those are best practice. And if you had some sort of analytical review, process there, it could identify, because you've got a very capable audit committee. Like, these are great questions. Even to say, like, why is other revenue significantly higher? Well, that could be a very quick answer, but it also could be, oh, well, we double booked something or something like that. So I do think that process of the audit committee, and I would consider that part of the oversight function, is critical. And I do, my best practice recommendation is quarterly review that should probably take up to about 30 minutes in your audit committee meetings just to be able to see the current results. And I mean, I understand, like, year end is your time to sort of make things exact and perfect and all your estimates are done. But you can have a very high quality financial review on a quarterly basis that would not, be a waste of anyone's time, in my opinion.
Great. Thank you very much. I think that's it for me at present.
I don't see any more lights on, but I do have a question of my own, Andy. You spoke about a very healthy figure in terms of our net assets. You highlighted that. Could you comment on the relationship between that and the depreciation expense that would be associated with that?
Yeah, so I mean, usually what we would see very typically, if you have $12 million of capital expenditures, we would expect to see $12 million of debt. We really do. Maybe not 12, but 10, 11, like a very significant portion of your capital asset additions would be funded through debt. And the fact that like a quarter of it was funded through debt really is the reason why your net asset went to a net debt position, because the net asset calculation is your financial assets less your financial liabilities, and that's the result. So when you increase your non-financial assets, which would be your capital assets and prepaids, for example, that is throwing off because you've used a lot of cash. You've used a lot of cash, $9 million of cash went out this year from the reserves and from different funds to fund those capital asset additions, which is really, really great to see. Then, of course, we see amortization went from 4.6 to 5.8 million dollars. That's a very significant increase to your amortization expense in 1 year, which to me, like I usually would have a management letter. It's one of my most common points, other than segregation of duties, would be, I think often towns under fund their capital departments and utilities and funds. Like you want to see a town or a municipal unit die, they don't have a good business sector and they don't invest in capital assets. And this is a tremendous, to be able to purchase almost $13 million of capital assets with really just $3 million of debt added is great. Like if you look on page, where am I? Page 4, it should be. Yeah. So if you look at your, on page 4, if you have it, you'll see on the non-financial assets, your tangible capital asset, the cost of it. It went from 96. I mean, there were some disposals as well, but 96 up to 102. And your long-term debt barely increased, $1 million, 1.4. So to see that discrepancy between your capital asset growing and the debt growing is a really positive sign for the financial picture of West Hants. You've got $112 million of invested capital in your infrastructure. That is great. I mean, that is 3 times ballpark your annual revenues, which is a great ratio. We see 1-to-1 a lot there. So I really think that West Hants has done some wonderful commitments to their capital infrastructure, and I think that's going to pay dividends long term.
Thank you. Let Carly answer it. All right.
I'll also add to your response there, Andy. Under page 16, 17, you get a breakdown of the tangible capital assets. So you can look at seeing like the additions, deletions, disposals over the year. So that should reconcile again to those statements.
All right. Thank you. Councillor Ivey.
Thank you. 3 short snappers, if I could, at the end here. One is and it just became obvious, I think, to a couple of others raised it with me. But the salary for the elected officials, there's 10 of us that are generally all paid the same, except for the mayor and the deputy mayor. But we've got a different group of numbers in there. Are we changing the way we're allocating compensation? In other words, is there like pension benefit thrown in there now or some other that's changing? Because there seems to be a different set of numbers.
Yeah, so we would have to add part of anything that we expense as part of the remuneration. This is to kind of match what's on the website, and we're required to report through FRAM and the MGA. So that would include anything like that, but it would also be, if you think back to 24, 25, I believe the election happened in November 2024. Council made a motion early 2025 to make a change to the remuneration. So, and as part of the election, we also had individuals in our deputy mayor position change. And so you'll see that there's prorated amounts within there that impact that change halfway through the year.
Excuse me for that. Did that come through on the screen?
No. That answer your question, Jim? Did you hear the answer?
Well, I heard the crux of it, but it's still, to me, so what is it that drives those differences in the amounts? Because there's, like, I don't understand why they would be different. Because we're all, with the election, with new people coming on board, that starts a new cycle and when the remuneration changed, that would change a different cycle for everybody.
Yep. So some people have pension and some people don't.
That is what it is. Okay.
Yep.
You said,
but some
I alluded to that. I wasn't sure that you were agreeing with it or not.
Yeah, but some of the other things would be associated too. Again, if you look at where our deputy mayor was before and after.
Right.
So you'll see that particularly through the year also changed, and that's part of some of it.
Okay, thank you. The second of the three that I had, the second one has to do with the Valley Waste. Is that still an ongoing issue? I know that it's being worked on, has been discussed before, and but it lingers. Is that right?
Yeah, that one lingers. And it's one of those ones that Andy and I talk about every year. They had a lot of changes, then I was away, then they had some more changes. So again, just trying to get everybody caught up on the same page. But we're holding it until we get confirmation from them on what they're doing. Yeah.
Thank you. And then the last question I have, it goes to conversation we would have had last August, September, as it relates to this year's budget, but it goes to a comment on us under allocating, I don't know if I get the wording right on this, but the correct tax rate amount for the RCMP based on an incorrect allocation back in 23-24. So my question is there something here that tracks that we get that caught up, or am I misunderstanding the nature of what was allocated within that 4-cent rate for West Hants?
You're talking about the 4-cent rate increase for West Hants in budget time?
Yeah.
There's some other things that play into that, of course, but that was all discussed during budget time. I don't have my budget files here to kind of talk about all what changed, but the biggest driver of some of that change was increases in waste. So we discussed that at budget time. And from 2023, which year did I come back? So 23-24's budget. So in 23-24's budget, there was, again, that budgeting issue and some, again, misestimations in there. And once 24-25 came in, we had to then correct some of those within our taxing model to make sure that we accounted for the 700,000 that was not captured in the taxing before. So it wasn't all related to RCMP. There was the RCMP provincial portion, not the $6 million that goes to the federal government. And I don't have it right here in front of me, but there's various things. There was some depreciation for the sewer utility. There was a grant that got double entered. So there was a few things within there that we kind of cleaned up within that report that went to council as well as the audit committee. So those would have been corrected as part of the 24-25 audit budget. And then in the 25-26 budget, The increases again are associated to the waste and other various items. So it wasn't associated to the RCMP.
Thank you. I just was trying to get a sense if we had a tracking mechanism for knowing when we had that caught up or not. And it may be appropriate someplace else versus around this table. So I think that's it. I'm good.
Councillor Whedon.
Yes, thank you, Chair. My question is kind of similar to Councillor Ivy's on the salary end of things. That's already been asked and answered. But on the expenses column there, probably for you, Director Rashawn, is that councillors' expenses that they submit monthly or during their term? Because under Councillor District 4, there's an amount there, and I've never put in an expense claim.
This would include training, anything that you go off to, and like it would include anything that's in particular to you. If you wanted to look at the detail, I can kind of go in, but usually it's training that you would go off on. If you attend the NSFM conferences, if there's any kind of offsite training through NSFM or AMANs, or I believe this one might include Robert's Rules of Order training and code of conduct training. So I think that's what you'll see there. So yeah.
Okay, thank you. So would be monthly submissions of expenses and then other things that maybe we go to that we don't even set a claim for, but we get charged for it.
Yeah.
Okay. And I wanted to thank committee member Vicky there for asking about the other revenue, the 2.7 million. That really jumped out at me too. And thank you, Andy, for answering that earlier. Thanks.
All right, seeing no more lights. Thank you, Andy. I think we're looking for a recommendation to be put on the screen, please, Chelsea.
The screen there. Yeah.
Somebody needs to move.
Tricky.
Do we need somebody to move the adoption of the financial statements?
That's what we're in the process of doing. But we need to get, we're trying to get a recommendation up on the screen. So and we have it now. Thank you. So would somebody like to make the recommendation? Councillor Wheat.
Thank you, Chair. I'll make the recommendation that the Audit Committee recommends that Council approve the audited consolidated financial statement ending March 31st, 2025 for West Hants Regional Municipality as presented to the Audit Committee.
Do we have a second? Crystal? Any discussion? Any further discussion? Seeing no more lights. All those in favor? Contrary minded? Motion carried. Thank you very much. Thank you, Andy.
Thanks, everybody. I really appreciate
Feeling
it.
better soon.
Thank you. I appreciate that too. Cheers.
Okay, moving on to item number 7, Director's Update. Director Rochon.
Thank you, Your Worship. So I just wanted to give council, audit committee here, just a little bit of updates. So now once council has approved the audited statements, and we'll be looking for hopefully a special council meeting so that we can get those off to the province as well. Then we will be posting our RFP for auditing services. So we're hoping we'll have a meeting probably sooner than later on the of the audit committee, probably at the end of March, so that we can then get prepared for the audit presentation. So we'll have a couple, probably about 3 back-to-back meetings. So we'll probably in the upcoming year have more than our normal 4 meetings, just to kind of give you guys an update where we're working on getting the audit RFP finalized. Once that's up, we hope that it closes early or mid-March. So we'll have something coming back to you, and then we'll make the recommendation to council. The other item that's on the agenda, kind of in my update, which is associated to the financial system update. So again, I'm just keeping this on your guys' radar. It's a big process that's upcoming in this year. It's going to require a lot of staff resources. It's going to require significant investment. So just something to kind of keep in mind as we're going through our data transition, as we're working through. So we'll be kind of updating you guys on how process is going, but we are making a recommendation in the upcoming budget year for the new financial system. And I have given council kind of a heads up on what the costs so far are looking like, and what that looks like. There's not a lot of products out there that cater to municipal financial operations, so we are very limited in the pool of which we can get quotes from. So we are working through that procurement process now to get numbers and have something for council. And I don't see it on the agenda, but I will just quickly address the report that was circulated as part of the agenda, which was the 23-24 Financial Condition Index. I know some of you might be familiar with this report. Some of you may not be. It's a really great report. I know the province was behind in their issuing of these reports for a little while. So they have released two. So I've only kind of reviewed the most up-to-date one here with you, but as we have been consistent over the last number of years, we are still in a low risk with one yellow category, and that being, of course, our tax collection receivable. And that does continue to be something that we work on. However, we do have a significant large account that we've been dealing with that we will be continuing to deal with. And hopefully we'll have updates for council soon on that matter. But it does impact that ratio. So we are just still working towards that. And I'm happy to answer any questions on that report or any of the other items I just addressed here.
Sorry, I wasn't watching who was first. You're new, Vicky, so you can go first.
Thank you, Mr. Chair. I apologize that I'm the one asking all the questions here, but I'm quite intrigued by all of this. Asking an accountant to come in for their first meeting when there's financial statements being presented is probably not wise. The uncollected taxes, this was a couple of years ago. I'm wondering two things. One, is it any better now? Like, is it up to date? Is it any better?
It was getting better, but the outstanding account is significant and continues to grow.
The second question, and it may be that account or it may be something completely different, but I know that West Hands was recently in court trying to force payment.
Yeah.
Is that a fairly good portion of this 13%?
Yes.
Okay, thanks.
Councillor Whedon.
Yes, thank you, Chair. For you, Director Rashawn, one of the things I noticed in this report was the only 482 people have moved to West Hands in the last 10 years. That's only one person per week. And it just seemed, is that changed recently, or has it just been, is there something that makes that for a growing municipality, that just seems like a very small number to me, 482 people.
Again, these are prepared by the province, so they use the numbers that they get from Statistics Canada, as well as the tax information that they might have access to when they're preparing the statistical data. And of course, they have more information than we have, so I can't audit their numbers per se. But what I can say is through preliminary meetings on the integrated resource plan, they're seeing kind of similar growth. So, and this is also based on 2 years ago, so not necessarily caught up to where we're at now. Yeah.
Yeah, thank you for that. And I was glad to see that the second part of that report, where the citizen member brought up about the 13% uncollected taxes, that it did only go up 1% from the previous year, from 12% to 13%. So with that one file taken out, we'd be probably coming down on that amount, would we not? Thank you.
Councillor Ivey.
Yeah, thank you, Chair. Thanks very much for that information. I was curious about the auditor because of timing and so on. So that's good to know, and as well as the computer system accounting upgrades. So the only other thing I guess I'll just kind of add to the comment earlier, and or the pretty tight with the package this week to be able to go through all of that to get here, which I understand, with timing things happen, but equally with the comment earlier on financials, the format that was previously to the audit committee, I think is a really good format, Carly, and it might be tweaked a little bit, and the same thing going to council. Like it gives the breakout that would alleviate a lot of questions, and I think really show throughout the year how the budget's being allocated. And I don't know how much more work it is to pull that in, but I really encourage that generally more than it's worth.
If you wouldn't mind, worship,
Sure.
I'll comment back. Yeah, no, that's great feedback. I actually prepare that. I have to prepare that every time. So every month I have to prepare that to prepare the council. Knowing that we're going to be meeting in March and this committee typically sees quarterly reports, I wanted to show what was been presented to council at this time. I will have the detailed reports for the quarter ends in the next meeting that has that detail. Yeah.
That's really great. It might even be that those reports then go through to count. You know what I mean? Depending on the timing and how they line up, I think it'd be a good thing for that added information. I think just
Exactly. And I do know we have the ability, because the next thing that is on our agenda as well in our March meeting will be our review of our internal processes, our internal controls. But we also, as a new committee with new members, should probably re-look at our terms of reference as well. So we'll kind of look at that, which talks about our meeting breakdowns, what's at each meeting. And what we can do is, I know the composition, the role of the audit committee and council has kind of changed over the year, whereas council's gotten more and more items. If it's the wishes of council, again, we can then refer stuff up to the council from here, reducing again the amounts that are going to the council table, but having that assurance. So again, that would be the wishes of council, but it's definitely something we can do.
if I could, I would, I actually would very much support that. I think reviewing the areas that are tested as part of the audit process and the areas that you folks check into, expense policy and all those things, well worth looking at. I think there's a few new ones that could go in there to add some more to your plate. But there's just areas as we've grown that there's other areas that I think that would be well suited to be in there too. So thank you. I'll stop.
Thank you. All right. Thank you, Director Rochon. I was talking to some doctors today, so yeah, so slip of the tongue.
Yeah.
All right, correspondence. I don't think there's any correspondence, and public comment period. Anyone in the public? You sure? All right, thank you. So the date of the next meeting is going to be sometime in early to mid-March, and we'll wait to be notified. So with that, the meeting can be adjourned. Thank you all for coming.
Thank you. Wasn't that a lot?